You can find me at CoinGuy.Bitcoin. Link below, description, all that fun stuff. Patreon account. Everything that typically you would find on the socials is listed in the description, including my donations page. So if you find any of this helpful, useful, since I'm charging nothing for any information, tips are always welcome. That being said, what we're doing right now is we're looking at the entire history of Bitcoin on the chart, on weekly candles. I just want to go through some of the TA on what these particular indicators mean, what some of them tell me. And then I want to go through some of our top coins on the ISO charts to see where we stand, what's going on, how freaked out we are about the latest pullback, and where we're sitting. So I'm going to clean up these just for 1 second to give you a better look, and then we'll add them back and describe what they are. So just to show people, when we are on, this is what the non-log scale, logarithmic scale. So this shows you the up and down and the volatility. And it kind of scares the shit out of you because it looks like we've dropped back down and it looks like crypto's on the way out. Unless you were to actually look at the logarithmic scale, which basically is taking these denominations here. So we're starting at 0 and we're moving up 4,000, 8,000, 12,000, and keep going up in iterations. And it makes these look like giant peaks. What log scale does is it doubles in each one of these, so the intervals are different. So these are $4,000 intervals. Log scale would be like 10, then 100, then 1,000, so that it doesn't look like this. So that when you see it, this is what we get. So now that you're able to draw a trend line, here's what crypto's doing. This is what you want to see, this constant straight up over time. So it doesn't matter about these peaks, these valleys, it doesn't matter about the peak and the valley. All this is just noise, because over time, this is only a 12-year period, we're just getting this constant up, up, up. So it's just something I like to show people. It makes you feel a little bit less scared than when you look at it like this. And it's like, oh, up, down, almost over, up, up, down, almost over. But it's not over time when you look at this movement. So we're on the weekly. First thing I want to do is add our moving averages just to see where we're sitting. And when we look at these moving averages, the only one I really care about is the 200 week. So the red one. So we're going to uncheck the other ones just to make this clean. And we're going to see where our 200 week moving average sits. Make this a little larger. So I want to circle the times that we've dipped under 200. So we've dipped under the 200 here. We've touched on the 200 here. We've dipped under here. And all of these are small little dips. This is the closest long time, but it was all on the top side. So this is acting as a resistance and it's staying above it, almost like a support. This is now the only time that it's come under, it stayed under for this amount of time. So now the 200 week has become a resistance instead of a support. So every other one of these times has signaled the bottom of the market. And after you've hit this bottom, the next thing you did was a run up, 11,000%. After you've hit this bottom, we have a small run up, 320%. We come back down to another bottom. You get 1,400, 1,700%. So if we were to see this as a bottom, and we want to take, even Yeah. It's not like it's going to take a drastic move to get one of these same situations. So I would like to think that this 200-week moving average is kind of like an indicator that we've cracked the bottom. So we'll ditch that. And now we're going to ditch the 200-week moving average. Actually, I'll leave it on there. But we want the relative strength index. Now, in the middle of this, anything above this line is overbought. Anything below this line is oversold. So this is like your little healthy mid-range. This is where we play. This is where it's hot, and this is where it's cold. Okay, so delete those again. So if we take a look on the weekly chart again, and it just so happens that you can see this dip in the 200-week right here corresponds to this down here on the moving average, on the relative strength index. And as you can see here, same idea. Relative strength index is doing the same thing that the 200-week moving average is. And then the next move is blowing up to the oversold or overbought territory. Sorry, I get confused with the terminology of these because I'm learning just like you guys. But as you can see, for most of the times that we get these dramatic moves below the 200-week moving average, we also get these bottoms on the relative strength index. Now, at the same time, when you see these peaks, peak, 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 and double top, look at what they're doing. So here's the top, relative strength blowing out. So it's over this line. That should give you a signal that we're going into the hot zone, but then it pulls back. Every time that we get one of these and it matches up, the next move is down and down. But when we get down here, it's the next move is up. So it's an ebb and flow that's nonstop and continues to keep happening. And when we see where we are right now, we have come below. We're kind of hanging out around that area. And any other time that we've seen that structure, we've come below, we're kind of hanging out, and then we rip to the plug. We've come down, we've touched up twice, and then ripped up. So it is a good sign that that is where we are, that this is what's happening, that this is what's happening. And then one other indicator I like to add, which are my favorite, is the moving average or the MACD, which is the moving average convergence divergence. There's a lot of words, but basically, when you get this blue line on top of this orange line, the market rips. You get this action. You can see it every time. And then when we get these green, we are bullish. When we get the red, we are bearish. This is a very simple indicator just to see where you're sitting. And if we look now, we have a small amount of green. So that's bullish. We've come up from here. So that's a bullish move, but with nothing dramatic. And these are all real small ones. So it's not like that. But our green's still over. It looks like we're about to cross. It looks like this could go down into the red. And it looks like we have a little bit of room to move down here. So these look like it can go a little bit lower. And considering most of the crypto world is calling for a 12 to 14,000 Bitcoin, that is something that is in the cards. So this was a quick overview on the Bitcoin. We'll click on daily chart to show you daily chart. We're hugely under the 200-week moving average. Come down and touch underneath. And on the daily. So if you want to walk these back, go to the biggest time frame that you can. The monthly. It's red, but it's coming like it's running out of red. It's slowly getting lighter and lighter. On a weekly time frame, it's getting lighter and lighter on the monthly because we're having small good weeks in comparison, relatively. We roll it back to a day. It looks like we've come out of some bad days. We're going to start moving into better days. These are going to cross, and this will start moving up. This has touched the bottom, green. So this is kind of, and the more you bring back the time frame, the more you can kind of see. Getting a little bit of green in there on the 4 hour and the 1 hour chart. So, and the lowest I like to go for any information is a 15-minute candle. And that's just if you're trading around for the day. 1 minute candles will let you scare the shit out of yourself. Watch these at your own peril. But that's where we are. Kind of seems like a lot to take in, but it should tell you that this is a normal course of ebb and flow. And this is something that can happen, and it's something that doesn't make us worried. It actually makes us buy more coins. That's what I've been doing for this entire dip. Okay, so I'm going to delete these. And we'll go with our Fibonacci retrace, which I like to draw on. I'm going to take our market cycle top from the last bull market and our COVID crash, or the bottom of the market. And I'm going to use this as my peak. This is my valley. And we're going to overlay Fibonacci retracement numbers. So when we see a peak, the bottom, we could pretty much guess that it will make its way through this. When it hits this golden pocket here is about the time you're about to see an asset go crazy. I think I might have lost my internet for a second, but this little area right here is basically where you're about to start ripping. And then you move through this area, you come up and you touch the 4236 Fibonacci in this top area, and that's basically the top of the market. You start to experience down, a little bit of a retrace up, and then the market collapses. One of the spots the market likes to come back to is the 618 or the 236. So this area. I've been saying this from videos and videos back that this was the area. So I was looking for anywhere around a $15,000 to a $7,000. But I kind of thought it would be around in the middle. And we did touch the 15,000. We came back into this little area. So let's just say that this is our new bottom. So let's say this is our bottom. And now this is our all-time high, much like the last cycle. And the other one that we took these moves for, which got us this top and showed us where we would be coming back to, possibly lower, but I'm just going to call it this for argument's sake of this video. And now this time we're going to drop it here. And now we go back to here. And let's drag down the numbers to see where this tops out. Now when we shoot up to the 4236 fib in this zone, you're looking at $200,000 Bitcoin. So, I mean, is that tomorrow? Are we shooting up to $200,000 Bitcoin tomorrow? No, we don't believe so. Let me draw a little bit of a trend line. It's just the most rudimentary, basic, quick trend line I could possibly put on. So extend this past. To get to this 423 fib, following the trend and getting to up here. This is July to September 2023. So you're looking at minimum another fucking half a year to a year of just drudging sideways, trading in these little ranges, making our way up, and then blasting off, and then coming down, and then making your way back down. And then when you come back down, you would think, a 50 to a $25,000 Bitcoin will be the bottom next time, after running up to 20,000, 200,000, and then dropping back down 90%, 85%, yeah, 28,000. So yeah, that's basically how we're able to months and months and months in advance call the top here, call the bottom here, and predict the future of a 200,000 coming back down to, you'll be able to just see years in advance here of what's going on. So, not to make a giant long video, which I've probably gone way too fast, I'm going to end this one here. I'm going to come right back on and hit record again and put out a second video tonight. And we're going to go through the ISO coins in a very quick pattern and see where they are all sitting. Thanks for tuning in. Chance, the coin guy. You can find me at Bitcoin. You can find me at CoinGuy.Bitcoin. I got to get used to this Web 3.0. All right. Thanks a lot for tuning in, folks. And